There is one power stock that shows up again and again when you read the smart money filings. And the interesting part is that the smart money does not agree on it. In the same broad window, one legendary investor bought it big, and another legendary investor sold completely out. The stock is Vistra, ticker VST, a Texas power producer that has become the poster child for the AI electricity trade. Data centers need enormous, round-the-clock power, and Vistra sells exactly that. So here is the question worth a few minutes. When investors this good land on opposite sides of the same name, what is each one actually seeing? And what would settle it? Every position here comes from public 13F filings. Start with the buyers. Third Point, run by Dan Loeb, held a Vistra position worth about $930 million, roughly 7.42% of the reported book, a top 2 position. That is not a toe in the water. That is conviction. And Appaloosa, David Tepper's fund, did something even louder. Tepper did not just hold Vistra, he increased the position by about 114%, roughly doubling down, to about $304 million, over 5% of the book. Two very different, very sharp investors, both leaning hard into the same AI power name in the same window. On its own, that looks like a strong bull signal. But that is only half the filing. Stanley Druckenmiller, one of the best macro traders alive, had bought Vistra earlier, near $30, and then he fully exited. Gone. And separately, Michael Burry, the investor from The Big Short, sold his Vistra exposure at around $182. So the picture is not a clean convergence at all. It is a split. Two heavyweights bought aggressively. Two heavyweights walked away. Same stock, same AI power story, opposite conclusions. That is the honest read. 13F filings show you what they did, not why. Loeb and Tepper are betting the demand keeps compounding. Druckenmiller and Burry decided the price already paid them for it. Here is why smart people can honestly disagree. The demand side is not a rumor. Meta signed a deal for about 2.1 gigawatts of power tied to Vistra. A real signed agreement, not a hope. Hyperscalers need firm 24/7 baseload power for their AI data centers, and a merchant power producer like Vistra sells exactly that. So the bulls, Loeb and Tepper, are reading durable, contracted demand. The bears, Druckenmiller and Burry, are not denying the demand. They are saying the stock already priced years of it in after a run that took it up several-fold. One camp is buying the demand, the other is selling the multiple. Both can be rational at the same time. So what would actually settle the split? The deals are signed. The price is the open question. Watch two things. First, hyperscaler capital spending. If the AI build-out keeps accelerating, the demand thesis that Loeb and Tepper are buying keeps compounding. Second, the next round of 13F filings. If Tepper keeps adding while the sellers stay out, conviction is separating from caution in real time. A single quarter is a snapshot, not a verdict. Filings tell you the positions. The next filings tell you who was early. Every number here came from public SEC data. This is educational, not advice. Do your own work before you act on any of it.